Clubhouse Pro. I'm
Enough with your 30-person Clubhouse rooms.
All right, fine, I'll take it.
Come on, man. We're talking about the future of finance. We got the creator of Compound, 1inch, the man who explained AMMs to the world.
That's true.
We should be able to do better than this.
All right, we're filling up. What time is it right now in SF?
5 p.m.
5 p.m. Okay. So this is like a happy hour room, basically.
Yeah, we're competing with happy hour. We're competing with a beautiful day, and we're also competing with I think Elad and crew have some room going as well. They have. I thought that was today.
Is that right? Yeah, that's right. It is. That's all right.
Yeah.
DeFi is a lot
And we're competing against Snoop Dogg's NFT drop.
I saw that. I was actually just in that room, and I honestly couldn't take it. It was a little too much.
If you're getting your crypto advice from Snoop Dogg, then you deserve whatever happens to you.
That is, yeah, I think that's fair. Somebody was trying to convince everybody in the audience to create NFTs and try to sell them on OpenSea, and look, I mean,
maybe that's where we'll start. Yeah.
I mean, I love I love all the excitement around NFTs, but there's a supply side problem.
Yeah, let me pin that for a second, because I think that's where we're going to start the conversation on NFTs. Why not? Yeah. Right? Everyone's talking about them. Everyone's curious about them. Sure. So we're gonna explore this beast called NFTs, but then we'll just let the conversation go wherever it does. But give it another minute. Call your friends. Once we get at least 1,000 people in here, we can get it started.
Okay.
I mean, I don't roll out of bed for less than 1,000, so let's go for 1,000.
I actually rolled out of bed. It's evening your time. It's 8 a.m. here in Singapore.
I'm always in bed.
Fair enough.
That's what retirement means. You sit in bed all day.
Hey, Robert.
Hey, everybody. Excited to talk about NFTs and crypto and DeFi and all the amazing things out there.
Everything is NFTs now. Even DeFi needs to become NFTs.
I'm not an NFT.
Well, yes, you are. You're not fungible.
But I'm not a token. Yeah. I'm NF person.
NFP. All right. Can anyone get an accurate room head count here? Maybe we should just have everyone sound off one by one.
I think we're at 850.
Oof, falling way short of Snoop Dogg here.
Maybe
at least we're crushing Elad and Paul's TGIF in tech. If we fell below,
that's true.
If we fell below them, I would leave.
All right. I'm retweeting as fast as I can, Paul.
Okay, I'll retweet your retweet. Hang on, we got to get this to at least 1,000. It's pathetic if we can't get 1,000.
All right. Working on it.
What's your Twitter handle? Haseeb.
HOSSEED.
We'll have to have a separate one on what that means. Why that's not quite your name, but is your name.
It helps people. Okay. It helps people pronounce my name. That's why I chose that handle.
I see. Okay, I think we're over. Are we over 1,000? Mine shows 867.
It's rising by the second. The faster we click the retweet button.
That's right.
Yeah,
that's right.
Everyone, please retweet the tweet that I just tweeted. If everyone in this room retweets it, then we'll hit 1,000 really fast. Then we can get started. Then we can finish, and then we can go about a real Friday evening. So
this is like a real-time 2017 style ICO.
Well, we just got to add we just got to put up the link, and that Robert's going to hand out free compound tokens to every listener. And you just insert your compound in the link, and then you get more back. For every one that you put in, Robert will give you 10 compound tokens back. Isn't that how it works?
Yes, that's exactly how it works. I'm going to go broke by the end of this Clubhouse.
I mean, as far as I can tell from Twitter, all Elon Musk does all day is hand out tokens.
Vitalik too. I don't know how the
Vitalik too.
Time to run enterprises.
Okay, I think we're at 1,000. Can someone else confirm? No, it might be just being optimistic.
Looks like we're 900. Looks like we're
900. Oh my God, this is pathetic. Meanwhile, Snoop Dogg is at 3,500. This is embarrassing.
We've drained some. We've drained some from Snoop Dogg. He's going down. We're going up. I think the trend line is good.
Well,
so we just need a bit more juice.
A bit more juice. All right, come on, people, retweet that tweet, please. Get folks in here. I feel like I'm a carnival barker now, working for Paul Davison. As long as we're here, is anyone else? I mean, there's a narrative going around that Clubhouse is declining in popularity and volume. Is that true?
You tell me. You spend more time on here than I do.
I only speak. I don't really show up to listen. I've had a hard time finding interesting people. I did drop in on one where Robert was speaking, and I thought that was pretty interesting, which is, I think, part of the reason why I'm excited to have him here. I think maybe we'll just start off on that before we get to NFTs. So let's get underway out of respect for all the people here, even though they've failed us but not retweeting our tweet, and even though we're 100 people short of the magic 1,000 numbers. I think we're going to lower our dignity. We're going to sacrifice our morals here, and we're just gonna go ahead with less than 1,000 people. Anyway, everyone, welcome to the DeFi room. We're going to talk DeFi. Joining me are Haseeb Qureshi. I don't know how I just became the moderator, but I guess I volunteered. Joining me are Haseeb Qureshi, who is a managing partner at Dragonfly Capital, and he used to work with me at Metastable briefly, and he's like a longtime crypto nerd. I think you were at Airbnb, professional poker player, all kinds of crazy stuff. Anton, founder of Oneinch.exchange, it's kind of the premier place aggregator for DeFi exchanges. So you can go on there, they'll give you the best route and way to sell or buy your decentralized tokens. And Robert Leshner, creator of Compound, and quote unquote visionary, according to me. So I'm gonna kick it off. This is gonna be a casual conversation. We're gonna talk about DeFi. Now, I'm not going to assume that everybody here knows everything. I think this is a mistake that many of the crypto conversations make. So I would ask the team that when we're talk about anything crypto related, it's fine. But please try to define things, right? Please try to be very explicit and explain exactly what each thing that you're talking about is. So if you say Uniswap, try to mention what Uniswap is the first time we mention it. So I'll start off and I'll just say DeFi. DeFi just stands for decentralized finance. And that's mostly these days financial applications built as smart contracts on top of the Ethereum blockchain, which is a general purpose computing blockchain. It does cover other blockchains as well, but Ethereum is where most of the DeFi action is. And so yeah, we're talking about decentralized finance today. We'll also be talking about NFTs, which are non-fungible tokens. Fungible means that they're the same. So like, Bitcoin, whether you have one Bitcoin or the next, in theory, it's all the same. If you have a US dollar and you have, another US dollar, it doesn't matter which serial number is on there, it's still good as a US dollar, so it's fungible. But for example, a piece of art or a person or even a specific place or time, these things are not fungible because you can't just exchange them for each other. They're not the same thing at all. In fact, most of the world is non-fungible, but in finance and math and science, we do have some concepts of things that are fungible. Interestingly enough, in quantum mechanics, particles are fungible, but that's another whole different beast. Anyway, so that's NFTs, non-fungible tokens, and DeFi, decentralized finance. So I'm going to kick off the conversation. Robert, I caught you a couple of weeks back on one of these clubhouses, and you made a remark in passing that I thought was really interesting. You basically said that we are almost like in the command line phase of the internet right now with DeFi, and a lot of the products that are being built are really not designed for end users, and the way it'll look even a few years from now is going to be completely different. And I think you were making maybe a DOS Windows analogy or a command line and user interface and graphical user interface analogy, but I'm going to let you pick it up from there.
Sure. So 3 years ago there wasn't a phrase DeFi. When I created Compound, which is an interest rate market that lives on a blockchain, and the market is sort of run by a computer program instead of by people and banks and brokers and spreadsheets and the way that most financial markets are run. When we had this idea for Compound, there wasn't a phrase for decentralized finance yet. There were people who were experimenting with like making computer programs on a blockchain, move assets or route them in one way or another with logic. But there wasn't like an established concept of like what you could create with this. And we, envisioned and built, a very simple, like, proof of concept of, a market where there's interest rates on different assets, and it's administered by a smart contract, which is just another way of saying computer program. And the system would run on its own. And, in this early stage, and I think we're in a very early stage, the way that you interact with this market is that you have a crypto private key, typically stored on hardware or in your browser. And you interact with this smart contract or computer program on a blockchain yourself. It's, a very, surprisingly technologically sophisticated action that I think most people aren't yet comfortable with. I think most people don't, custody their own wealth themselves. I think most people aren't, that familiar with, one, how blockchains work, and two, how smart contracts work, and three, how, crypto keys work. And to bring it all together, you're basically, in order to access this market, you have to do a lot of steps that are quite difficult. And I have flashbacks to like using email in 1991. Well, there weren't beautiful internet clients and email clients. There was like a protocol for SMTP where you could structure an email to anyone else in the world, and the way you accessed it was like extremely crude. There weren't mainstream systems for handling email yet. I remember there was like a computer lab at school that like the big thing that like happened was one time we sent an email to another school collectively. We're in a similar era where you as a user can directly interact with these systems in order to accomplish a task. If I want to earn an interest rate, I can take my assets and like physically move them into this computer program that's living on a blockchain. But this is like an incredibly crude, an early interaction and pattern, where we as, individuals are basically like have to know how the technology works, and we do it on our own. I think over time, what's going to happen is that, this is an incredibly early technology, and it's going to become abstracted away such that over time, the way you're going to interact with DeFi applications is not by custodying your own crypto, interacting with a smart contract that lives on a blockchain, managing that process yourself. That's going to be handled for you. And you as a user are going to access financial products and financial markets that, yes, they're built on a blockchain, and they reap all the benefits of, that, which, to name a few really quickly, there's complete transparency, there's complete fairness, the transactions settle basically instantly. It's an unbelievably open system. You're going to reap all the benefits of this, but through probably, abstractions like the AOLs that will emerge, where you'll access these new financial markets and products, not yourself, but through businesses and entities and institutions, and, beautiful experiences that get built. So we're at an unbelievably early era of the technology, in my opinion. I think that, right now we've like proven that things are possible. And the most powerful aspect of all of this is that, crypto addresses are a complete standardizing format to access these applications and markets running on a blockchain. And you can be an individual, but you can also be, an institution. You can be, a piece of software. And all of these things have the same open and equal and fair access to these financial markets and products that we create. And it's going to eventually set off this race to discover, what is possible and what works best. And, I think over time we'll get more and more and more, mechanisms of interacting with these markets that we don't really even imagine, in 2021.
Another thing I want to share.
By the way, before, sorry, just
ahead,
sorry to interrupt. Administrative point. If every one of the speakers please taps the three dots in the upper right of their Clubhouse screen, you'll be able to change your audio quality to high. That changes what your audio quality is sent out to the listeners. So if you have a decent internet connection, please change your audio quality to high. And then I'm going to pass it back to Haseeb once he's reset his audio quality. Thank you.
I'm sorry for being low quality, folks.
You sound much better now, actually.
So I wanted to share actually. So I remember back when I first started looking into DeFi, and at the time, back, Robert, you were sort of describing the very early days of DeFi back in 2017 and 2016, even when it was just, it was Bancor, and then, you were starting Compound, and MakerDAO was just getting launched. At the time, it was called Sai, the first iteration of MakerDAO. And back then, the motivation behind building this stuff was mostly around ideology. It was mostly people who were like, look, I don't believe in centralized exchanges. I don't believe in these companies that take my money, that they get hacked all the time, they shut down. I don't know if I can trust them. The motivation behind building a lot of this stuff was purely around, look, we want to build a different kind of world. And in the early days, the first call it year and a half, nothing was really working, in the sense that you kind of had these really janky, like you described, sort of MS-DOS versions of the thing you would eventually want. You sort of have like spreadsheets kind of spit out in a command line, but they're borderline unusable. You sort of can't really intuitively interact with these things because they're so complex, they're so expensive, there's so little liquidity. The fees are just untenable. And so for a long time, it was really mostly crazy crypto people who were using this stuff. And it was summer last year when DeFi really took off in a massive way. And we saw volumes, crazy increases in volumes, users growing, at 20, 30% month over month. We also saw the total amount of value locked in DeFi go from, I think it started the year at about 1 billion and it ended at something like 25, 30 billion. So huge amounts of growth in all of the fundamental numbers. But the one thing that really clicked for me about why all this was changing was actually using 1inch, which is the company that Anton is working on. So 1inch is an aggregator, meaning that you can sort of think about it as it's kind of like the kayak of DeFi, where you go to one place and it routes you to wherever is the best price for anything on DeFi. DeFi has hundreds of different exchanges, or there are also different places where you can borrow and lend and do things like that. But it's so much complexity. But because everything's open, everything is, you don't need a plaid for DeFi because everything is on the blockchain. Everything you can see publicly, what the prices are, and what is the best way to fill an order. 1inch does all that work, which is actually somewhat complex because there's a lot of routing algorithms that go into all this. But 1inch, you can type in the token. You can say, hey, I want to buy 500 ETH or 500 USDC worth of this token, and 1inch will find you the best price across every single liquidity source on DeFi. And I remember I was talking to a friend of mine, and at the time, DeFi was really taking off, and it felt very frothy, especially in the summer. He was like, okay, I don't know if this is going to stay. And when I realized, he was telling me about, okay, there's this new protocol that launched. He wanted to buy the token, and he was like, look, I could go on CoinMarketCap. I could look up which exchanges list this token, which of those exchanges actually have liquidity. Okay, then I gotta sign up for the exchange. Is it a fake exchange? I got to sign up. I got to do a KYC. It takes a couple of days to actually get them to approve my account. Then I got to move money on there. Then I got to buy the token. Then I got to take all that stuff off the exchange. And it's such a pain in the ass. Instead, I could just go to 1inch, type in the name of this token, and go buy it in 5 seconds. And I realized that the reason why people are going to use DeFi is not because the people using it now are not ideologues. They're not people who are motivated by creating a different financial system, blah, blah, blah. They're motivated because they're lazy. And that this is actually a better way to give them disintermediated access to financial products. And that's the point of crypto. That's the absolute end game, is all the talk that we've done over the years about disintermediating systems. DeFi is exactly that, and that's what makes it more efficient.
Yeah, I'm going to give Anton a chance to talk about 1inch in a sec, but I just want to point out a very interesting thing that 1inch revealed for me is that DeFi applications are composable, which means that they're functions and addresses that live on the blockchain, and any other application on the blockchain can call them. And they have an address to call it, and they have a place to insert a token. And so it's like a whole bunch of coin-operated vending machines kind of all stitched together in a giant network, and they can pass work off to each other. So once you solve a problem in DeFi once, that problem is solved forever. it's accessible to everyone, everywhere in DeFi land, including other applications. Compared to the web, when the web came along, the web was open for linking. What made the web is that you suddenly took the entire document repository and you made it possible to link to each other permissionlessly. I could link to your web page without asking you permission. This was revolutionary. And Google became the most important company in the web generation because they basically went and they linked to all the web pages and they crawled them all and they gave you back the information. They read the links and they read the data. But what Google cannot do is Google can't call an application underneath. So if you look at things like even Google Flight Search or Google Frugal, which is kind of their shopping search, or if you look at Kayak, these applications end up being very limited because they can't actually call the applications underneath. They can't go to United's website and cleanly call the application without United's permission. It's not really compatible. And so these, for example, Google Flight Search won't carry data from Southwest Airlines because Southwest Airlines doesn't want to be searched. So the aggregators just can't gain that much power. There are aggregators who have tried to aggregate, for example, social networks. And it doesn't work because the social networks cut you off. They're winner-take-all monopolies within their vertical domains. So Twitter doesn't want to be aggregated by Google. That's why you can't search inside Twitter from Google. You can only get some old data that Google's crawled, but you can't get the full power Twitter search from inside Google because Twitter doesn't expose that API endpoint to Google. They cut Google off. DeFi doesn't work like that. On DeFi, you can permissionlessly call the underlying application. It's not just an API, the whole thing is open. All the entry points are open, all the exit points are open, all the source code is open. So by default, everything ends up composable. Applications like 1inch really don't have that much value outside of DeFi, but on DeFi, they are kind of the right interaction point. So now I'm going to hand it to Anton. He can tell you about the background on 1inch and all that.
Yeah, I would love to add more about composability and all this permissionless access among all these applications on blockchain. The thing is, like, when we started in 2019, we had integrated all the DEXs. It was nearly 5 to 10 DEXs. I do not remember exact number, but we could not expect that to 2021, like today, we would have 49 DEXs only on Ethereum, and we have like 12 more on Binance Smart Chain right now. And one interesting thing that, there are like 49 DEXs on Ethereum, and it's really hard to compete for them with each other to get their users. And what I think that most of the DEXs would die without users and volumes if there will not be any aggregation like 1inch or any other. I mean, even if some companies, projects do not succeed with their user interface, with their user acquisition, they could succeed in technology, and after being aggregated, they could get their fair volumes, fair in terms of what prices they could offer. Yeah. So
yeah, I was actually talking to a company recently that has an innovation in DEXs where they think they can do it a lot more cheaply. And I kind of asked them how they were going to get distribution. They just said the aggregators will send us all the distribution, will be cheaper, and so we'll win that race and we'll just get all the volume. Very efficient market.
Yeah.
And I think the net result of having aggregators that really are able to dominate the market is basically that it ends up commodifying liquidity. So, if you are a DEX or if you are a market maker and you can offer better prices than anybody else, ultimately the allegiance, I think, over the long run that users are going to have are to these aggregators. That said, today, I mean, this is something that's really interesting. I'd be curious to get your guys' perspectives on. Today, aggregators actually have a fairly low market share within DeFi trading. So right now, I would say that probably, maybe let me take a step back. So I'd say there are roughly 3 things working today in DeFi. There are a lot of things being tried, but only 3 things really seem to have product market fit today. The first thing I'd say is trading. The second thing with that, that's 1inch, that's Uniswap, that's all the kind of the core functions of the Coinbase and stuff like that. That's kind of a lot of what's migrated to DeFi. The second thing is lending. So, Robert, Compound, Aave, those are the two biggest platforms that do lending. Also, MakerDAO does lending. That's sort of like the BlockFi competitor. And the third thing is yield more generally. So there are a lot of yield aggregators that I think are, you could say, okay, those things are kind of working. And that is, again, sort of competitive with BlockFi. Lending is one way to generate yield. You could argue that's a broader category. But it seems like beyond that, there aren't a whole lot of things that are really working in DeFi. There are a lot of things being tried, a lot of derivatives, lots of things like insurance. I think they're still fleggling. They haven't really taken off yet. And so I'm curious from your
But long
perspective.
term, wouldn't you expect every well, okay, so finance at some level is just bundling things and unbundling and rebundling them, right? It's just you tear them apart in their constituent parts, and then you kind of reassemble tranches for like different risk profiles, different exposures. So you can take something apart into little pieces, then you can build an index out of it, right? And that index ends up being an index fund, or you can build some kind of a derivative out of it if you want more leverage, or you can build insurance out of it if you want to cover your downside, or you can do lending out of it. And there, at the end of the day, it's all done for like risk-adjusted yield, right? There's some risk that you're willing to tolerate, and there's some yield that you want, and there's some time frame and some liquidity profile, and you kind of combine these things together, and you get like a new financial product. And Wall Street has created what look like a very large number of them, but in DeFi land already, I'm seeing way, way, way more of them. Like there's so many of these. Now, you mentioned that the rest of the things kind of aren't working. That said, I would divide them into two categories. There's on-chain and there's off-chain, right? So there's activity where everything is happening on the blockchain. And so your data, your adjudication, your asset, all of those are on the blockchain. I think every single one of those that works in regular finance will eventually have a working counterpart in DeFi. It's the stuff that has to talk to off-chain. Like if you want to lend to an offline business and therefore you need someone to evaluate how good that business is, that's the stuff is, I think, a little harder to pull off. Suspect today, maybe we'll figure out the mechanisms for it, but haven't yet. But I would expect all the other pieces should work. So for example, we have on-chain insurance, I think, should work in theory. If you're insuring on-chain assets and you're relying on an on-chain signal purely in the crypto world, that should work. On-chain index funds should work. On-chain venture funds where somebody else is managing your money for you and has reputation and track record, hopefully should work, right? So I think they should work, but you're right in that today it's all trading, lending, and more broadly speaking, yield, of which lending is a component. But yeah, it'd be interesting to hear from Anton, Robert. What else are you seeing that's working? What else do you think could work? Is there something new that we could build here that just doesn't even exist in the centralized finance world?
So thank you for the softball. My theory of where we're headed for all of this is that every product that exists in legacy financial markets will exist in DeFi, and newer, potentially better versions of them may exist, and new permutations and combinations will be created, which are superior. So I think the end state is we're going to have better financial products and markets, and it's going to happen for a couple of reasons. So let me, offer why. So the first is that blockchains, when it comes to how things settle, they settle differently than in legacy financial markets. So all of the things that we're doing right now, they settle instantly. They don't operate in terms of days or daily settlement. In the legacy financial markets, oftentimes you have, the concept of an interest rate, and the minimum unit of time is a day, right? I can lend money to a bank or vice versa from a bank for one day, and we move cash once a day, right? And it settles at the end of day, and that's how we measure time. On a blockchain, we can measure time in seconds. So I can borrow from you, Naval, for 3 minutes. This is a type of product that doesn't and can't really exist in existing markets. So that's the first piece, is like the unit of time. The second is the composability. So we've touched on this a little bit, but you can make an entirely new application because every other application that lives on the blockchain is generally open source and open for development. If I want to build a product in existing markets, oftentimes I need to get someone's permission that might take years I might have to strike up a partnership or a business development relationship with multiple different people to create a new financial product. But every single product that exists in DeFi exist in an open fashion. So if you're a developer in your bedroom in, any country on earth, you can, without anyone's permission, make a product that uses whatever building blocks and existing products you want to use that already exist. And so, we've never really encountered anything like this, in my opinion, before. And it can, essentially allow you to build off of the shoulders of everything that already exists instead of just like one building block that exists in existing financial markets. So that's radical. And I think this is going to create, entirely new things that we haven't seen. Obviously, I think it'll be like cousins or sort of improved versions of things that already exist, right? We've had a couple thousand years of finance. We're like 8,000 years in. And for the most part, people trade and they borrow and they pool wealth and they pool management and they form corporations to conduct collective activity. And so I think like from those like vague building blocks we'll have new products, but they don't have to work the same way. We've already seen crypto native products that are just better, in some cases. And so I think first we'll replicate everything and then we'll improve everything.
So I think the framework in which I think about, where DeFi is likely to have a structural advantage. So I broadly agree with you. I think most everything that exists in traditional finance with respect to crypto is going to get rebuilt within DeFi. That said, I think some things will work better than others, even at scale. Now, right now, obviously, we're in the fledgling days, and there's a lot of path dependence to what ends up getting traction early on and what doesn't. But I think there are roughly 3 dimensions that you can actually compete on to get users and get adoption. The first one is price. If you offer better prices than in CeFi, then people are going to come use DeFi. So CeFi is what we generally, in the DeFi world, we call like sort of centralized services like Coinbase and Binance and stuff. We call it CeFi, somewhat cutely. So if you can offer better prices, then yeah, people are going to come and use DeFi. Today, there are some things like Curve, for example, which is basically like an on-chain automated market maker, which is just a different kind of exchange. That settles stablecoin to stablecoin trading. And a lot of people I know, like big market makers and traders, actually they use Curve instead of going to market makers or instead of going to Binance or Coinbase to go sell stablecoins for each other, because Curve is actually just cheaper. It actually just offers better prices. So the first thing is price. If you can get better prices, people will use it. The second thing is risk. If you're lower risk than what's out there in centralized exchange land, then people will use it, right? So especially in the early days of crypto, I'm sure that many of the people in the audience remember Mt. Gox. They remember some of the big hacks that have happened to the first generation of crypto exchanges. And that's a lot of what motivates people who've been through that pain and have been hit before by these kinds of attacks, that look, in DeFi, everything is run by the contracts. There's no way that an operator in DeFi, or no way if you actually work with high quality protocols and you audit the code, or you rely on high quality audits, there's no way that the operators of the protocol can steal any of the money. So first thing is price, second thing is risk, third thing is user experience, right? And that was what I was describing earlier with how easy it is to just go do a trade on DeFi rather than to go through the laborious multi-day process of actually getting set up on a new exchange. So there are a lot of things on which DeFi will eventually have an advantage on one of those 3 dimensions. UX is the easiest just because DeFi, everything can happen in one click, as opposed to all the stuff that needs to happen in CeFi land of signing forms and onboarding and KYC and all this stuff. But the one thing where I think DeFi has a structural weakness compared to traditional finance is around credit. Now, a lot of the stuff actually in CeFi, especially in the early days, never relied on credit at all. Credit has never really been a part of crypto. It's only now starting to become more and more of a thing as the market's becoming more robust. But in the early days, I mean, think of BitMEX. BitMEX was the largest derivatives exchange in the world, and it had 0 credit, basically meaning that it was a system that was designed that anybody could transfer Bitcoin into this exchange, and without knowing anything about you or your creditworthiness, it allowed you to trade a derivative, which is called a perpetual swap. And they designed the whole system so that we can never assume that we're ever going to be able to claw back a debt from anyone. everybody is basically, to a first approximation, nameless, faceless, the same way they are in DeFi. And so, things like that, DeFi is going to displace someday because it operates in the same structure that DeFi does, which is that there's no contracts. There's no way that if you do the wrong thing in DeFi, I can go back and sue you and say, hey, you screwed me over, come back and pay this debt. There's no such thing as DeFi. There are some things that DeFi that's totally fine. Exchange, lending, those are good examples of things that you can do purely fully secure or fully without having to trust anybody for longer than the time that you're in the smart contract. But there are a lot of things in finance that do require credit. And that's where I think DeFi is probably for a very, very long time, if not forever, going to lag behind for structural reasons.
It's very good at things that robots and computer programs are good at, and very bad at things that humans, are good at. I think to that point that like it's going to be bad for credit. It's if you think about DeFi, just think about this as a computer program, that's open source that anyone can see how it operates. They can see that it's fair. They can interact with it. That lives on a blockchain, managing assets and managing financial products and markets. And that's very good at things that don't require judgment. And so I agree with you, Haseeb. That's going to be a long time before certain things that require human judgment enter the picture. But there's a lot of use cases that are better being run by robots than by humans, and I think that should account for most financial markets.
Yeah, actually, an interesting example of that is Uniswap, which was the first automated market maker that came out. And for those of you who don't know, basically market making, as far as I understand it, I'm not a heavy trader or market maker, but from what I understand, it's basically people who are providing liquidity to an exchange and they're taking the other side of whatever bet you're going to take. So when you go to sell something or buy something and there isn't a seller or buyer on the other side, the market maker fills that transaction, makes a little profit, and basically they operate the exchange and take the other side of the trade. And forever, I think people always just assumed that has to be intelligent humans on the other side doing that, or at least having written down the specific rules for that specific trading pair at that specific time. And Uniswap upended this completely by using the simplest algorithm possible. And you can go look it up. Actually, Haseeb has a great article on it, I think, on his Medium. So if you just search for Haseeb and AMM or Haseeb Uniswap, it'll probably come up. But where you take a simple, dumb robotic algorithm and you replace market making, not in all cases, but in many cases. And it's just completely upended because that is something, to Robert's point, I would have thought would have been done by humans forever because it's been done by humans forever. But it turns out a simple DeFi algorithm just replaced it. And at least for a large category of trades, we're never going back.
Anton, go ahead. Looks like you're about to say something.
Yeah, let me add one more interesting thing here is that actually first time in human history we have a universal fair executor, which is like observable and it's provable that it's fair. And as Robert said that DeFi will have all the products which centralized finance already have, and he said that new kind of products will appear. I believe having this universal fair executor can help to introduce new products and introduce new types of behavior, types of interaction also.
So
do you have any ideas of what could? Sorry,
go ahead.
But do you have any ideas of what could be like a new product or a new class of products that could emerge because of, as you say, this universal executor and universal pair? I mean, it's an interesting concept, right? Because in history, like normally, if you and I have a contract that we write out, then we try to resolve it ourselves. And if it doesn't work, then we have to go to a judge, and it's up to the judge, and it's up to the legal system that we're in, and so on. And then if someone pays, like there has to be proof of payment. You have to kind of try and say, yes, there's a proof, and show bank wires. And you're basically saying there's a universal adjudicator, which is the Ethereum code and smart contract, Solidity smart contract, and then there's the universal bursar or pair, which is on the blockchain. I can see that yes, in the master ledger the money was transferred. So I think that's what you're referring to. But what kinds of new applications do you think could emerge that we just can't have in CeFi thanks to that?
When I was talking about executor and actor, I meant a little bit more than just putting some verified records. In general, if we would speak about blockchains as Bitcoin, Ethereum, it's not like a passive something like database which can make some records, update some records. The core thing is when you ask blockchain to do something, validators nodes will check all the conditions of what you're trying to do, and they can decline your request, or they can execute it based on what is stated inside the blockchain. For example, if Bitcoin is a really simple concept, there is like balances on different addresses, and you can change balances on your transactions. Anyway, Bitcoin network miners, they will verify that you have access to wallet which balance you're trying to decrease. And they will check that you are not trying to spend more than you have. It's like abstraction. And if we're talking about Ethereum as a next step, next generation of blockchains, is that we have application states written in blockchain, and they could be modified with transactions. It's like next level. And I mean, we can have some new type of interactions among people. For example, one of the first things I believe is AMMs, like Banker, Uniswap, Balancer, and others, because we got application which always provides supply and demand. Because without AMM on any exchange, like order book based exchanges, centralized or decentralized, market making is a very important thing. Without market making, you will have almost empty order book. You will have a huge spread. You will come and see like tens percentages in spread, and it will not be possible to do any trades. But what AMMs done, they provide supply and demand for any volume you could offer. For 1 cent, for 1 million, for example, Uniswap formula would allow you to trade any volume, but the more you trade, the worse is the rate, for sure.
I mean, one of the things that is one of the intrinsic parts of DeFi that makes it quite different than traditional financial companies is the way that governance works in DeFi. So by governance, what we mean is, all these protocols, Uniswap, Bancor, 1inch, etc. All these protocols are ultimately they're owned for the most part by their token holders. So it's not like a traditional company where there's a board and there's a CEO and this and that. Instead, you have a somewhat loosely federated group of people who hold the token. And these tokens are generally called governance tokens. So Compound has a governance token, 1inch has a governance token. And the people who hold this governance token, they get to vote through some type of on-chain voting system on the changes that get made to this protocol. This is all fairly new. Really the kind of advent of on-chain governance, it was an idea that's been bandied around for a long time. It really started with the DAO, which was the very first decentralized autonomous organization. That's what DAO stands for. The very first one, really kind of started in, what was it, 2016 was when the DAO happened, or maybe it was 2015. And ever since then, there's been increasing iterations on what is the right way to run a decentralized organization. Robert, you've been, of anybody in this room, you have the most experience in actually being close to the middle in seeing how a decentralized autonomous organization governs a DeFi protocol in practice. What would you say right now is working about it, and what do you think is not working with respect to governance today?
Yeah, it's a big question. And the DAO, so the DAO was in 2016, as Haseeb mentioned, and it was basically, one of the first examples of, a computer program on Ethereum gathering assets from many users and then potentially, going through a voting process to deploy those assets. It ended in spectacular failure. It was one of the first examples of, a smart contract going awry due to a bug. It actually led to the Ethereum blockchain forking into Ethereum and Ethereum Classic. And it sort of scarred a lot of the early users of the blockchain for a lot of different reasons. But, to discuss sort of like one of the things that's like working and not working and, how governance works at Compound, all of these systems are, I like to describe them as just computer programs. And most computer programs, you don't have a standard and final version of them. Most software, you improve over time or you make modifications to over time. One of the really cool things about, building an application on a blockchain is that you can define within the computer program, the rules by which the code can evolve, the rules by which the variables and the parameters can be changed. And if you're building a financial market or financial product, you want there to be a lot of predictability and certainty around how things work and how they can be changed over time. There have been countless stories over the last, year and decades where in financial markets, the rules seem to change without anyone too quickly, right? Where, like the rules, like an oil ETF, starts to implode and they say, oh no, it doesn't work like this anymore. Like, we're going to change the mechanics of how this product works, right? We have the permission of regulators to just on a moment's notice change the rules. Well, the financial markets that we're building in DeFi, we can take it a step further and we can define in code how the code itself can evolve. And this is really powerful because we can build financial markets that don't change in unexpected ways. They only change in expected ways. And so Compound, the way it changes, whether it's changing a parameter or changing the logic of the markets themselves, is that token holders, which includes the original developers of this system, which includes the investors that backed it, which includes every single user that uses it, every single user is a token holder. This token is used to vote on changes, whether it's a parameter change, whether it's an interest rate change, whether it's the code of the system itself, whether it's adding new markets, whether it's removing markets. These token holders get to vote on changes to the protocol, whether they're small or large. And this process plays out over days. After a change is approved, it takes 2 days before it goes into effect. And it creates a system by which the markets are significantly more predictable than markets that operate in the legacy financial system. This is one of the earliest experiments of sort of like financial market governance of this kind. I'd say like all things in DeFi, we're incredibly early, but some of the results of this are phenomenal. Since rolling this system out last June, it's been less than a year, which is kind of crazy. We've seen like 40 proposals or so that have changed the protocol, that have upgraded it in substantial ways and small ways. Some that have been rejected by the token holders who have said, no, that change is too much, it's too far, or they've said, yes, that's a great change, let's implement it. And throughout that time, this has been done on a backdrop of the amount of assets in the protocol, which are at risk if there's bad decisions that get made, right? Have been grown from about $100 million a year ago to about $14 billion of assets currently in Compound. All of them being governed by these token holders who are responsible for, not permitting bad decisions to change the parameters of the code of the system. And it's been pretty remarkable to watch because it's so far been successful. Obviously it's not a guarantee of the future in any single way, but there's now, looking on the website, $14.3 billion supplied to Compound, which is, governed by a decentralized governance process. And I, frankly think that it's the future of how all financial markets will operate. It's more transparent and more predictable than anything on Wall Street.
Let me add about governance. I really like how it's working right now. But it still sounds like experiment because it's like new kind of interaction for people who own token. They can decide on how protocol could be involved, but it still have some issues, like it's still gameable. For example, most of the governance systems, they suppose that if someone have a token on its balance, this automatically means that person is aligned with project interests, because they assume that this person have this token in its portfolio, and if this token will drop in price, it will be like a huge loss for this person, and people will vote to avoid this situation. But the thing is that finance, decentralized finance, already are so sophisticated that people can have tokens on their balance, but can be not aligned with the project. They can borrow these tokens, and they will owe fixed amount of tokens, no matter what price will be of this token. They can make bad decisions, bad votes. They can have also short positions to hedge, and it will be even profitable for them to make bad decisions. But yeah, as I said, I really like how it's evolving, and it's like an experiment. For example, different projects are trying to solve it differently. I'm not sure how Compound works with this problem. I heard Curve project made locks of their tokens. You have to lock your tokens for huge period of time to have ability to vote, and the huger is period, the more votes you will have. But making people to lock tokens could create secondary market of locked tokens. They could sell tokenize and sell locked tokens to each other, because they can tokenize without your permission. Because all this composability, they can build program which will handle their tokens as shares to tokenize it and to sell it. And right now, Curve is solving this by denying applications like smart contracts to do these locks. But in future, I believe this kind of hack will be deprecated, and any address on Ethereum will be able, for example, to have smart contracts. And I'm not sure how to solve this exact problem. It's like still open problem.
Yeah, it's an interesting point about how the governance here is plutocratic. It's one token, one vote. It's not democratic. It's not one person, one vote, because there's no concept of one person on a blockchain. And you can't, and if you try to enforce that or create that, people can just code around it. So even saying like, okay, well, we don't want people passing tokens around for the vote, then we only want locked tokens. But then, as you said, there's a secondary market for locked tokens, and then you can shift that around. So it's very hard to get people to play by the rules of the road. I would say, like, we've talked about a lot of the advantages of DeFi, right? We've talked about like, okay, it's non-custodial, so you get to hold on to it. It's 24/7. It's global. It's interoperable. It's composable. It's fast. It settles instantly. It's mass. It's adjudicated by computers. all of that stuff is great, but the one very, very difficult thing is all these things we take for granted in the normal finance world, things like reversibility, accountability in case of fraud. If I send a wire to the wrong address, then I can probably get it back. If someone like rips me off, if they lie, I can sue them in court and I can go after them. If someone steals my bank account password, they don't actually get all my assets because wherever they transferred it to, we get it back from them, where their checks and balances stop it from going out. These things don't exist in crypto land, right? It really is caveat emptor. And when you're handling large sums of money, or when these protocols are locking up large sums of money, it's incredibly difficult. You get one thing wrong, and you could literally lose millions of dollars at the individual level or billions of dollars at the protocol level through very simple mistakes around incentives and code. So we're still very much in the Wild West phase. I think Robert is right in that we're going to have to go from this Unix phase of UNIX phase of DeFi, where everything is command line and sophisticated, and you're calling these very complex functions, to dumbed down, simple GUI apps living inside your phone that only let you do things that are relatively safe and have built-in checks and balances like multi-signature wallets and some kind of maybe not reversibility, but checks and balances and so on. But yeah, it's gonna be fascinating.
I would say that we're getting there. The thing that's really beautiful about DeFi is that because nobody controls it, there's no central planning committee for DeFi that sets the rules of the road. It really means that as people iterate and find better ways of doing what's been done in the past, people just arrive at that through a process of basically evolution. It's just markets kind of working themselves out in real time. So for centralized exchanges, if somebody realizes like, hey, the way that we've been doing custody or transfers, or we need to add whitelisting, we need to do this, you need the top down marching orders to get the thing to happen. Or you need the regulators to approve whatever the prerequisites to make that thing happen. In DeFi, somebody in the world comes up with it, launches it, and suddenly people are like, great, that's a way better way to do things. We're going to start using that instead. That's exactly how Uniswap arose to dominate DeFi trading. But
Yeah,
I think what we're going to
somebody
find,
on. Sorry, go ahead.
what I was going to say, what we're going to find over time, especially with respect to governance, because it's one of the biggest questions of like, how do these things change over time? Real world governance, real corporate governance is incredibly fucking complicated. And the reason, part of the reason why it's so complicated is it's just been around for thousands of years, so a lot of cruft has accrued onto it. But another reason why it's complicated is that they've actually seen all the crazy shit that people can pull. Like Anton was mentioning, okay, what if somebody gets a bunch of shares of the company and is able to enact a corporate takeover, but then they're actually net short and they have some crazy, what do you do to protect in that situation? And somewhere in the bylaws of a company is some special clause, whether it be a poison pill or some other crazy clause that they can use to defend against that attack because it's happened before. It's sort of in the collective memory of corporate corporate law. And the same thing is happening over time with DeFi. So Robert mentioned the DAO, which was the first ever decentralized financial organization, you can call it, and it ended catastrophically. And the DAO kind of extends a shadow over everything today in DeFi. Everybody remembers the DAO, and everybody is now damn sure that they're not going to make the same mistakes that the DAO made. But everything in DeFi benefits from that collective intelligence, that collective memory. Obviously, not everything. Some things make the same mistake and then they die very quickly. But the things that survive, the one inches, the Uniswaps, the compounds, they do so because they integrate all that knowledge and become smarter and smarter. I think governance is going to go the same way.
Yeah, so to your point, I think we are rediscovering the last 100 years of securities laws and why they exist. We're rediscovering all the reasons in DeFi, and we're rediscovering in 3 to 5 years. So all those scams and all that fraud and all those mistakes will arrive in a very compressed time frame. But on the other hand, we're forced to create code-based solutions around them, and because of the open source nature of it and the composable nature of it, it means that once we've solved a particular problem with logic and code and math, it's solved, and then we can just move on to the next one, and everybody else can use the code base for the previous solution.
All right, well, we're at an hour.
Yeah, well,
Go
I
ahead.
have at least two more topics I want to cover, but I don't know what you guys' time limits are. want to talk a little bit about regulation. I want to talk about NFTs because we promised that as a teaser at the opening. Do you guys have time, or you got to bounce?
I can go a bit long. I can go a bit long.
Yeah, let's pack all the good stuff into 15 minutes.
All right, let's do it. We got 15 minutes. Quick thoughts on regulation and how it's going to affect DeFi. If they start imposing the kinds of regulations that that exist in centralized finance on top of DeFi, it's going to kill DeFi, wouldn't it?
No, I totally disagree. Completely disagree. The thing that's beautiful about DeFi, I like to remind people, um, actually today, the largest source of uplink, meaning people, uploading files in the world is BitTorrent. A lot of people don't know this. A lot of people assume that like BitTorrent is basically done, where it's, oh, okay, well, that was, in 20, the early aughts, but now, people use Spotify, they use Netflix,
No,
but
it's tens of
tons of
percents of
people in the
internet
world.
traffic. Yeah.
Yeah, exactly. Tons of people in the world still use BitTorrent every single day, even though everything that can be have been thrown at it from a legal and regulatory perspective has been, but you just can't stop it. That's the nature of software, is that once you allow the internet to exist, anybody, once traffic is encrypted, anything that people want to do, ultimately they will be able to do, provided that they don't need another intermediary to get in their way. So I think with DeFi, you can. There's a lot of stuff. There are a lot of places where you can introduce choke points, right? You can say, okay, if you touch DeFi, then you have to go through an enhanced compliance process when you move your money onto a fiat on-ramp. But if you're comfortable living within DeFi, especially if you're international, because so much of when we talk about regulation, it's usually country specific. So much of DeFi volume is not coming from the US or from any jurisdiction that you and I are going to be sitting around talking about. It's a global phenomenon. So to that extent, if you're comfortable having your assets live in DeFi, which I think increasingly you are going to be, uh, the ability for countries to stop what's happening here from a regulatory perspective is just massively diminished. It's all code living on the blockchain. Unless you cut off access to the blockchain, you can't really cut off access to DeFi.
That's true. And the way I think that that DeFi is going to be regulated is that I think the underlying, protocols themselves, just like Bitcoin is a financial protocol, I think the underlying protocols themselves won't be regulated, but all of the different applications and on ramps to them will be regulated. Um, that's the first piece. The second is that I think that, over time, there's going to be a self regulatory need and action from these communities to start setting, better standards of safety, security, and call it a sense of fiduciary responsibility that doesn't necessarily exist today. You have some applications that get built with incredible discipline, and care and a focus on safety, and you've some that don't. And I think what's going to happen is over time, probably after errors are made or continue to be made, there's going to be standards that emerge, um, where over time our industry will sort of like require a higher level of care. And if that doesn't come from our industry, it's possible that regulators try to create a system in which you know it's difficult to regulate the underlying systems, but you can regulate the sort of development of them, and that's a scary thought. But there's the possibility that that emerges. And I think lastly, what will occur in terms of regulation is going to be you know not necessarily like one country able to regulate what is a financially global system. An application that gets built, is usable really anywhere in the world, but it's also able to be, you know, interacted with by other applications, and other DeFi, systems built on top of them. I think what will have to emerge is going to be sort of like a global approach for thinking about this as opposed to individual countries, because these are global financial markets, unlike legacy financial markets, which typically just exist in one country or in each country. DeFi is out of the gate global. And so I don't necessarily think that there can be a localized regulatory structure for applications that exist everywhere, simultaneously. So I think that's the sort of, future.
Yeah, I agree that it's pretty hard to regulate. It's global. Any country that tries to regulate it is basically just forcing the next Wall Street plus Shanghai plus Tokyo plus Hong Kong plus London out of their home country and making sure that wealth accrues to other countries. So it would be pretty silly. That said, they can definitely make life difficult, fiat on-ramps and off-ramps, monitoring developers, which would be a horrible thing. Taxation, they could basically force all the legal people out of it, and then it's just left to people who are willing to break the law. So that would be very unfortunate because it does seem like the internet is going to have its own currency. The internet is going to have its own free markets. The internet is going to have its own adjudication and governance and kind of its own contract law, and we should just sort of let it develop naturally. And it is global, it is cross-border, and like China with the Great Firewall of China cut itself off, or North Korea cut itself off completely off the internet, you could put yourself in a local cul-de-sac, but that's probably not where you want to be as a free and dynamic society. So, all right, I'm going to move on from the regulatory aspect. Let's talk a little bit about NFTs because I know it's on the tip of everyone's tongue, it's on top of everyone's mind. Everybody wants to see artists get rich. We're all waiting for the next wave of Beeples to be as rich as the crypto founders. So what do you guys think about that? Who here is a serious art collector? Who gets this? Who understands NFTs?
Robert gets it better than anybody I have met.
Well, I think it's incredibly early, like all things, but I'll give my own perspective on this. So fungible tokens are an unbelievably useful way of describing certain types of assets, right? So, everyone has made, crypto tokens. There's thousands of them floating around, most worthless, some not worthless, some super important, some relevant. Um, and ERC20 tokens are Ethereum's standard for, these assets. And most assets on Earth, are represented very well as tokens. Currencies are represented very well. Shares of a corporation are represented very well. The space that NFTs fill is, instead of saying, you know, this is a portion of something, it's almost like a complete fill in the blank that an NFT represents. So we're starting to see NFTs where, basically says the bearer of this asset, this item, can X, Y, and Z, right? It's a blank. And certain projects are taking this in radical directions. The first use cases are whoever owns this, asset, fill in the blank, has this URL, which is an image of a JPEG file or a GIF or a wave or whatever, quote, owns this asset. And I think it's a very primitive and early use case of like this NFT, but we're seeing so much more creativity where it says the bearer of this asset. And when you fill in the blank, it's incredibly interesting and rich. And it's going to create unique experiences, unique properties, unique powers. There's projects out there right now that are saying whoever owned this NFT gets, and use your imagination, like time to talk to the founder, a portion of the future, work output, access to, this beach house. NFTs can represent anything. And it's almost like a sort of like open-ended contractual right that the creators are going to fill in over time with more and more unique experiences. Instead of saying everyone has an equal experience, NFTs create unequal experiences for good or for bad. And I think the sort of design space here is very early. I don't think that collectibles are going to be the dominant sort of NFT experience over time. I think it's an amazing way to prove out this technology. But I think over time, what we start to see is, NFTs representing very unique and customized sort of like expectations, whether it's economic or not.
I think it's obvious that at scale, not everything that we are going to want to interact with in a financial system is fungible. There are a lot of things in the regular world that are fungible, right? Like dollars and shares of a company and bonds and other securitized type assets. But there are a lot of things like real estate or obviously art, which is the thing today that seems to be really working at scale in NFTs. Um, this is a large part of any meaningful financial system or any meaningful system of property rights, which is ultimately what blockchains enable, is a new conception of digital property rights. When I think of NFTs broadly, right now, collectibles and art is really kind of seems to be what's broken through to the mainstream and getting a lot of attention today. And it's tough to know exactly how this cycle plays out with respect to, you know, the balance of supply and demand between all this art and the people who are collecting. But at the end of the day, the way that I think about NFTs, which is a little bit a little bit abstract, which maybe reveals something about the way I think about this space in general. I think NFTs are essentially, they're a titling system. It's like, imagine we show up on an island together, and somebody starts writing up deeds, and they say, okay, here's a deed that says you own this piece of land, and here's a deed that says you own this tree, and here's a deed that says you own this, you know, this corner of the island. And that titling system is great when they're, you know, it's great to have a titling system, but the titling system is only valuable if the person writing that deed is actually good for it, right? If you make sure that, one, nobody else ever gets the same deed to the same asset, and if there's ever a dispute over who owns this thing, people are going to resort to, okay, what did this guy who wrote the deed say? When you buy an NFT, you're ultimately betting on a titling system. You're betting that the person who wrote you this deed is going to be good for it. And in many cases, the person who wrote you that deed is Ethereum itself. Sometimes it's some creator who's entering into not an explicit but an implicit contract that they are going to honor this NFT that you purchased as the canonical version of, whether it be a piece of art, whether it be some experience, whether it be a protocol like Decentralized, which is it's a VR world that you can go interact with, where the property in that virtual world is tokenized and represented as an NFT. And so when you buy a Decentraland NFT, what you're betting on implicitly is that Decentraland is going to always honor that NFT as being the canonical rights to that piece of land. And so I think what is being lost a little bit in all the frenzy around, you know, Snoop Dogg issuing NFTs is a real deep examination of, like, okay, what actually are we buying when we buy these NFTs? There was this big thread on Twitter that blew up a little while back, looking at actually, you know, the raw underlying data of an NFT. You know, to Robert's point, today the NFTs you see today, you actually don't get a different experience than anybody else. If you buy Snoop Dogg's crypto art or whatever it is he's selling, I have no idea. Everybody else can also go see the JPEG or the animated GIF or the video or the music or whatever it is that is tokenized and made as an NFT, but you sort of have the canonical rights. I think the way Nick Carter put it, which I thought was quite good, is that you get the autographed version of that particular digital art. But of course, that's only valuable if Snoop Dogg is not going to autograph 100,000 versions of it, right? So I think we're still in the process of discovering how this titling system is going to play out, and whether or not what kind of guarantees you actually need from the system you're betting on for it to be a legitimate way of thinking about digital property.
Here's my prediction. I completely agree with you, Haseeb. I think, you know, we're going to move away from this, like, it acts like a signed version of this, you know, piece of art, to it actually, NFTs actually possessing the intellectual property and true ownership of the piece of art or the music or the video, you know, where instead of it being like, hey, this is the only NFT version of, you know, Nyan Cat, it's the bearer of the NFT actually owns the sort of commercial and, you know, IP rights to the art. And I think this will flow from offline contracts, you know, referencing NFTs. But I think what's going to start to happen over time is they're going to look less like, you know, gimmicks and more like true ownership of artistic value.
I mean, I would love to see that come to life, but my question there is just like, property or intellectual property rights are the hardest property rights to enforce, because, you know, it's in the name. They're completely abstract, right? How do you enforce property rights in a totally
they're
open system
only
where you have no
enforced
court of
by
law?
exactly. They're enforced by a sovereign offline. If I can combine the points you guys have been making, my evolution of thinking NFTs went down the same road. At first, I was like, hey, this is nonsense. Everybody has access to that JPEG. There's nothing here. Then I also read the Nick Carter piece about how it's an autograph, and I thought, yeah, that's it. It's an autograph. But now I'm kind of starting to think actually what it is, it's a one level beyond that. It's a contract attached to a bearer asset. Basically, someone, by signing it, by digital signing it, by digital autographing it, they say, here is a contract that is attached to this asset that you can buy, sell, trade, or own. And whatever that contract says, I'm good for. But unlike a blockchain, it's not like a contract that is trustlessly enforced by the entire blockchain. It's really only as good as the person who signed it. So exactly, if Snoop Dogg says, I'm only going to sign 5 of these, then it's up to Snoop Dogg whether he signs a 6th or not. And it could be an arbitrary contract. The contract could be, I'm only signing 5 of these, therefore this has scarcity in some virtual sense. Or it could be, I'm attaching the royalties for this song onto the signature so that whatever I collect in royalties, I'm going to pay through. And again, it's only as good as Snoop Dogg's word on it. And the third is he could say, actually, these 5 give special access to my museum or my club or to my house or to my next performance. So fundamentally, I think the way that NFTs differ from fungible tokens, aka FTs, are that first, it's an arbitrary contract attached to that bearer asset, which you can kind of already do in Ethereum land, right? You can have a smart contract, and the smart contract makes a commitment to pay out to a wallet address under some conditions. But now the additional thing is it's kind of an arbitrary offline contract and not just online, where the trust relies upon the signatory and not on the entire blockchain. So, I couldn't buy and sell you any rights to Snoop Dogg's assets without Snoop Dogg's consent. So this is a way for Snoop Dogg to attach his consent onto this asset. So now I think we're sort of starting to feel our way around this elephant, the blind people trying to describe the elephant, and we're figuring out what NFTs are. And I would posit, just to summarize what both Robert and Haseeb have said, it's arbitrary contracts attached to bearer assets that are secured by the signatory.
Love it.
Yeah, I would love to add a little bit. Right now, I see NFTs are mostly used for art and for ownership, but I also can't wait to see identities on NFTs and finance, like a real finance usage. For example, someone could build a system similar to Compound or built on top of Compound to allow people to borrow assets with using their identity as collateral. For example, having ENS token, which is like ENS, is also some kind of identity. Most of the people have their nicks, the handles like from Twitter registered in ENS system, and they're like recognizable, and their public wallets are easily like discoverable for everyone. And someone could build system on top of Compound to allow borrowings for like collateral, such collateral as NFT identity, for example.
And that's some of the power of DeFi. Someone is going to build that, and Robert's going to wake up one day to find that it's plugged into his app without his permission, without his knowledge, without his ability to stop or censor, and off it goes.
And it's going to be fantastic.
That's great. All right. Well, thank you everyone for joining us, spending your Friday happy hour or wherever you are, maybe a different time of day, chatting DeFi. And we hope to see you around on the Ethernets, the interwebs.
Thanks, everybody.
Awesome.
Thank you, everybody. Thanks, Haseeb. Thanks, Anton. Thanks, Robert.
Thank you.
Take care, everybody. And we crossed 1,000, but we didn't beat Snoop Dogg.
Maybe we'll